That's what I want to look at. Sorry, one sec. Yeah, there we go. All right, guys. So we're gonna start off with Virgin Galactic today. Hope you all had a great week last week. As you all probably saw yesterday, their test flight didn't go so well. They obviously the engine didn't ignite and they had to glide back to safety, which was actually kind of a quasi positive, given that they were able to land the plane without an engine. So the market will probably react to that to the downside tomorrow, but keep in mind that they will be issuing a new test flight date, right? So that'll be a bullish catalyst after the pullback. And looking at the chart, I've already gone on this chart numerous times, but looking at the chart on the 1 year, we can see that, one sec, let me minimize this too. We can see that the new support area should be right around 2750-ish, possibly the 25 area even as well. So it may pull back down, I would say probably $5-6, maybe Monday, Tuesday, settle around, maybe around this area, 2750 area. And that would be a decent area to look at going long again via some calls or some leaps or stock if you want to own the stock long term. Just because remember that once they announce that new date, assuming they manage to rectify the issue with the engine, that could be a catalyst for the upside again, right? Because think about it, if it falls, you know, $5-6 on this kind of delay, then in theory it should pop $5-6 from the price it's at right now on a successful launch. Right, so go to 30, 38, 39, $40, probably new all-time highs, but not before the pullback, right? So I want to look for it to consolidate in this range right here, 25 to 2750 area. And if you look at the option chain, which I'll pull up right now as well. So the option chain for Virgin Galactic is over here. And we can see that for the December 18th OPEX this coming Friday, the expected move for Friday was about $5.60 in either direction. So the market was expecting a large move. Looking at the put to call interest, right, open interest, this was very bullish, right? Now this may be a reason why we may not decline as rapidly as people think we will, right? I think 10%, 15% would be a reasonable pullback, which would be around $3 to $4.50 roughly, right? Again, back to that 2750 area is where I would look at going long, but wait for consolidation, obviously, and then look at longer term call options because the company will announce a new date, and when that happens, the stock will rally again into that date as well, right? So again, looking for Friday's OPEX, the expected move is about $5.60 in either direction. So pulling up the chart again, let's see over here, right? The upside, and again, I don't think we need to worry about upside this week, given what happened on the weekend, right? Yesterday, upside would be right around over here, and the downside would be right around maybe 26 area. So right around over here, right? I think it'll end up in this area right here, right? I doubt it'll go below 25, but if it does, it's a good buying opportunity probably, right? So there's that right there. Looking out further, if you go out to the January OPEX, one sec, let me change my screen. So if you go to January OPEX, we can see the expected move for that time frame as well. And the market's currently pricing in a move of about $10 in either direction from the current price, right? So that would push us right to the all-time highs of around 42 or so. Lower area of around 22. Given that nothing happened that was drastically bad, like a crash, for example, or or damage of the equipment, I think it's going to be kind of a muted response to the downside, right? People think it's going to be a bloodbath tomorrow. I'm not so sure about that, right? So that's Virgin Galactic. Next, I want to talk about snow as well, right? So looking at snow, change screens again. So Snowflake, they IPO'd a few months ago, and they have an early lockup expiration on their stock. That means that their employees and insiders get to sell their shares come Tuesday, which means that there'll be a flood of new shares on the market on Tuesday. And I expect a nice pullback back down to the 250 area, probably below 200 given the valuation right now. They had a bunch of downgrades on Thursday and Friday last week as well. I think you see them back below like 250 in short order in the next couple of months, right? So I'm actually playing them via put spreads, 300, 250 put spreads for the February OPEX. But again, looking at the expected moves, which I'll pull up in a sec. So looking at the expected moves for that OPEX, right? See over here that for the January OPEX, the expected move on Snowflake is about $75 in one direction. So the downside from the current price would denote a target area of around $280 and an upside move of around 425. Now, I don't think it's going to push the upside area because it is way overvalued. They're currently worth about $100 billion, and they're doing about, I think it's 440 million for the past year or so. And they're not profitable yet either, right? So they're actually one of the most expensive companies in the market, if not the most expensive company based on price to sales. And they're actually worth more than their entire addressable market, which is insane. So think about it like this, you know, if I have a business that has a possible market of $10 million and I'm worth $15 million, that's the case with Snowflake right now, right? The same case. So it makes no sense at all, right? But longer term, it's a good short, right? Obviously manage your risk, you know, do what you understand. Don't take what I'm saying and just blindly play it, because I do my own research, right? Do your own research as well, right? Take what I'm saying and use it as food for thought, right? Aside from that, looking at the weekly OPEX on Snowflake, you can see that the expected move for the week is about $40 in one direction. So upside 395, downside 315 or so. I think it can easily burst the downside and fall below 300, possibly by Friday. But again, the premiums are pretty rich right now and the IV is inflated. So if you're buying just puts or just calls, you're going to have a bad time probably, right? Use spreads to mitigate your risk and don't take large position sizes on short durations. That's how you blow up your account, right? Next one we're going to discuss is Airbnb and DoorDash as well. They IPO'd last week. And pretty ridiculous. And not much to look at on the chart, right? They've only been trading for 2 days, but you can see over here, one second, you can see over here on the chart that Airbnb opened up at 165 area. It's already pulled back down to 140 area now. And I believe the valuation right now, let me just see. They're currently worth $86 billion with revenues of $3.6 billion right now. And they're not profitable right now, by the way, too, right? Just for a comparison's sake, Hilton is worth $30 billion and they're doing almost $6 billion in revenues right now. And obviously due to COVID, they're not profitable right now either, but that's just kind of a contrast you can see. You know, they actually own assets, whereas Airbnb does not, right? And there will be a lot of issues with Airbnb going forward with cities actually imposing the occupancy taxes on them, on people that are renting out their places for Airbnb. I know in Toronto, come January 1st, they're actually imposing a tax now on anyone that has an Airbnb. You have to actually pass that tax onto your customers, which makes it less cost competitive for people to use Airbnb versus a hotel, right? So I think you're going to see a lot of pain in the Airbnb and the DoorDash trades. Again, DoorDash right now is worth $60 billion. They're doing sales of $2 billion, and they're losing money as well. They're losing about $140 million, if I'm not mistaken. And they have a lot of competition. They have Uber Eats, they have Grubhub, they have Postmates, right? You have a lot of competition in the sector. There's zero differentiating factors whatsoever. It's absolutely absurd. We're definitely in an IPO bubble right now. And actually, Roblox and one other IPO pushed back their IPOs. They're supposed to IPO this coming week, I believe. They pushed it back to next year because they want to actually raise how much cash they're going to get, because DoorDash and Airbnb, their IPOs indicate that the underwriters did a poor job, given that they should have actually gotten a lot more cash from their IPOs than they actually did. I think each one raised about $3.5 billion each with a B, right? And given that they IPO'd at a lower price, but actually opened up at a much higher price, that means they missed out on a lot of extra cash that they could have raised and actually put that cash in their own pockets, right? So Roblox, and there's one other one, I forget the name of it. They actually pushed back their IPOs as well. So those two names are kind of interesting to look at on the short side. Once options are available, I will probably be taking a short position on them given the thesis of downside moves. DoorDash, again, like stupid valuation. A delivery company, a delivery app is essentially worth $60 billion. That's absolutely absurd, right? Just, for contrast, Starbucks is worth double that, right? And they're making $24 billion in sales, right? Obviously, they're a different business, but it just contrasts, they're worth double the price, but they're making like basically 12 times the amount of revenues, and they're making about 11 times, well, I mean, DoorDash isn't profitable, but they're making about $1.2 billion more in profit than DoorDash is, right? So keep that in mind. And I would not play DoorDash or Airbnb, given that they are crazy overvalued and options are not available yet. Moving on, we're looking at the Chinese EVs right now. So looking at NIO, right? So NIO had a down week as well. They did an offering last week as well too, to raise some more cash. And they're now at around 41.50 or so as of Friday. The expected moves for the week ahead, I'll pull that up right now. You can see over here, right? For the week ahead on NIO, we have an expected move of around, one sec. See if Frankie has it in his sheet. Yep, he does. Awesome, Frank. Great work. So the expected move for the week is $4.35 or 10.3%. Upside is 46.33. Downside is 37.63 on NIO. The potential move, which is found by combining the straddle price with the strangled price, right? That is $5.97 or upside of $47.95, downside of $36, right? So there is a wide range of possible values on NIO for the week ahead. I'm inclined to think it's going to go to the downside, given that they did an offering last week. And they are also looking at pushing the downside right now as well. Obviously, looking at the chart again, where's the chart? 1 second, it's over here. Oh, there it is. So you can see over here, support area should be right around 40-ish. If it breaks below 40, there's no support really until 25 area, perhaps, right? 30, 25 area. So keep this area in mind, and even then, it's pretty weak over here, right? You've had very little consolidation in any area from the $5 move up to $55 or so, right? So keep that in mind when looking at playing NIO. And obviously, given that they have their IV is lower than their HV, right? So it's not as high as it usually is, but even given that, it is still very high. They're pricing in right now roughly daily moves of about 7%, right? That's what the options market is pricing in every single day. So keep that in mind too. Next up, we have Xpev, right, which is a competitor of NIO's as well. And again, you can see that they had a down week as well last week. They're at 44.70 or so. And you're seeing it consolidate in this range around 40, 45-ish. You might be safe around 40, given that you have a bit of support over here. If that fails, then 35 area is next support. And obviously after that, there's no support until about 20, right? And think about how fast this rose up, right? On November 3rd, it was at $20 a share. And within within like 3 weeks, it went to $73 a share. That's absurd, right? So for it to fall back down to $20 a share, it wouldn't surprise me at all, right? Obviously, manage your risk again and use this information as you will. But the expected move for the week ahead on Xpev is, I'll show you right now. So we closed at 44.70, so 45. So it's about $5 in other direction. So upside would be 50, downside would be about 40 or so. And looking at January OPEX, if you want to go further out, looking at a expected move of around $12 in other direction. So downside of like 33, upside of 57 or so, right? Now keep in mind, if you are buying contracts that expire not this week, but the week after, for the 24th, you're actually only buying 3.5 trading days for that week because we have Christmas and the Eve as well, right? So the Eve is only a half day. I believe that's on the Thursday, if I'm not mistaken, and the day itself is on Friday. So the market's closed on Friday, and Thursday's a half day, if I'm not mistaken, right? So keep that in mind if you are buying contracts that expire this week, right? Because they will expire on the 24th, which is Thursday, at I think it's 1 o'clock, I believe, right? So just remember that you're paying for a shortened week as well, right? And time decay takes hold much, much faster than it would otherwise, right? So remember that. Next one we're looking at as well in the same sector is Li Automotive LI, right? Same sector, Chinese EVs, right? Electric vehicles. And here's a chart over here, right? So you can see, again, same pattern across NEO, LI, and Xpev. They all, rapidly ascended from that 20 area or so up to, a new high for LI was 47.50. And they've since pulled back pretty substantially. But LI is consolidating in this range right above 30 area, right? And if you're long the stock, again, I'm not. If you're long it, you want to keep looking at it and watching it hold this area over here. If it breaks this area, then downside could easily be back to 20 again, right? So we'll look at the expected move for the week on LI as well. Over here, we have a move of about $4 or so in either direction. So downside would be around 27.60, upside would be around 35.60. And also keep in mind that Friday is quadruple witching. So you have futures options, equity options, index options, and forward contracts all expiring on the same day, which is Friday, right? So it usually means more volatility. I haven't seen that happen, for the most part this past year on quad witching days. So it happens every quarter, right? So once every quarter when they all expire at the same time, that's what happens. You get a lot of volatility as everything's rolled over to the following quarter, right? Otherwise, looking at Tesla, right? So Tesla, I made a video on it last week talking about how it should see some downside, right? Obviously. If you didn't watch that, probably go back and watch that because I outlined bullish, bearish, and neutral strategies in that video, discussing how I thought it would fall from the all-time high. It was at 650 or so when I made the video, and then it fell the next day down to about 580 or so, and then recovered up to 620, and now it's at around 607. But my thesis is that after they have the S&P inclusion, which occurs on December 21st, which is next Monday, the stock price will start falling again as people no longer have a catalyst to see it pushing the upside, given the absurd valuation. And I also had a bunch of downgrades last week as well, right? So I do think you're going to see some downside in Tesla, possibly substantial downside. My bet is that it's going below 500 in the next month or so, right? But again, looking at the expected moves on Tesla for the week ahead, we can see that the EM is about $80 in either direction. So upside would be about 690, downside would be about 530 per share. And then going out to the January OPEX, which is what I'm targeting, the EM would be about $130 or so up or down. So from the current price, upside 740, downside would be around 480, right, on the downside. And that's in about 33 days or so. So keep it in mind, if you are holding Tesla, just be careful because I know people always say, oh yeah, it's a great short, whatever, yada, yada. Never before has it been, worth half a $1 trillion, and it's actually worth about 600 billion right now. But I do think you're going to see a nice pullback in it, given that it has gotten far ahead of itself, right? And obviously, manage your risk. IV is very high. You can see over here 95%, and the HV is around 73%. You can see on the IV actually chart. I'll show you right now. Where is it? Just how high the IV is, right? So if you're buying for this coming Friday OPEX, you're paying the highest prices pretty much people have paid all year. And you can see that in this chart over here, right? So the yellow line denotes the OPEX for December 18th, this coming Friday. And for the past 2 months, the IV has not been this high at all. Even if you go out 6 months, you can see that the IV has not been this high in the past 6 months. So you're paying the richest premiums that you've seen in the past 6 months if you're buying Tesla December 18th OPEX contract. So for this Friday, so I would not play this Friday. It might not be a bad idea if you're selling, iron condors super wide. Like for example, let me pull up the option again, right? So we know that the expected move for this coming week is about $80, right? So 690 upside, and you have 530 downside, right? So if we go up to these areas and we build a strategy around it, one sec. So if you go up to around 700 for example, and you were to sell the 700 and buy the 720, for example. Again, this is 20 wide over here because they don't offer anything in lower increments over here aside, above 700. So you receive a credit of about roughly $3.15 over here, right? And then you go to the downside as well, go down to that it was 530 area, right? Yeah. So 530, I'll go to 520 perhaps. And then you sell that and you buy the 500, right? And now you're receiving a credit of about $5 or so, $6 or so. And your maximum risk is your spread width on one side. So 520 minus 500 is $20 wide, minus your credit received of about $6. Your risk is $14 max loss for a credit of $6. And as long as the stock price stays between 520 and 700 by Friday, you make max profit, right? Again, this is a strategy that should be only be done by experienced option traders. If you don't understand how it works, I would not touch it, but I'm just giving an example of how to benefit off of this high IV, right? The rich premiums, right? It's kind of akin to, let's say you're in Florida and a hurricane's approaching and you get an alert on your phone. And so you go and buy bottled water, right? And it's sold out. And now people are willing to pay $10 for a bottle of water, right? And the hurricane passes by and Florida's unscathed. What happens to the price of the bottle of water? It comes back down again, right? So right now the hurricane is kind of approaching, which is Friday's OPEX, and the bottle of water is already $10 right now. So would you prefer to sell it or buy it? If you're buying it, your probability of profit is very, very low, and your probability of loss is much higher, right? Same idea. Next, we're looking at Apple. So Apple for the week. They had a great product launch with the AirPods Max. They actually sold out of those units, and they're on back order for 3 months now. And it's pretty impressive given that it's a new product and they're priced higher than the lowest priced iPhone right now. So I think they're going to do pretty well overall. They're also launching the new fitness subscription service this week as well. And they had a nice run last week. They pulled back off that high area of 125. But on the chart, we can see that it's kind of breaking out on this little wedge over here, right? It's forming kind of a little bit of a wedge. Again, I'm not a big chartist over here, right? But I'm looking at this and I'm saying, okay, you're seeing higher lows incrementally, right? And I think you're going to see it push their all-time highs probably in the next few weeks, right? By January OPEX is my guess. And the IV isn't that high either. Like you can pay a few bucks for in the money contracts, paying nominal extrinsic value in the contracts, right? Meaning that you're not paying any time decay or volatility premium either. But so looking at Apple over here, right? The expected move for the week on Apple is 368 in either direction. So the upside would be 126 for Friday. The downside would be 118.74. That denotes a move of about 3%. And looking at the option chain for the January OPEX, we can see that from the current price, 122 or so, the expected move for January 15th is about $10 in either direction. So downside of 112.50, upside of 132.50, right? I'm inclined to think it's going to see some upside moves because now analysts will factor in the AirPods Max into their forecast going forward, knowing that they sold out their first lot. And that will factor into an upside earning revision, likely, right? So I do think Apple can hit all-time highs in the next couple of months, probably 130, 135 in the next month or so. And I am very bullish on Apple. I like their positioning overall right now. They're firing on all cylinders right now, and they're doing a great job. They also announced they're going to be switching from Qualcomm chips in their phones, making their own chips as well. So that'll improve margins as well. So I do think you're seeing a lot of positive catalysts ahead for Apple, right? Next up is Microsoft. And they had a rumor on, I think it was on Friday, I believe, that Warren Buffett bought a big stake in the company. I'm not sure if that was verified or not, but either way, looking at the chart, here it is. You can see we've had consolidation in this range between 200 and 220 or so for the past, since July, right? So you've had 1, 2, 3, 4, 5 months and change consolidating in this area. And if anyone understands how consolidation works, typically you see a nice breakout at some point in time, right? Someone before, I think it was Shani who mentioned before the session that there was an issue with security or something like that with Office, but I don't think that should be a downside catalyst in the short term anyway. I do think that they're going to push back toward all-time highs and possibly hit as high as 350 or so in the next few months. So I'm long actually into the March expiration contracts. I've been buying deep in the money calls on this name over here, and looking at MSFT, we can see that for Friday's OPEX. Whoops, that's for Apple. 1 sec. So we have an expected move of $4.52 in either direction. So upside would be 217.79 for Friday, downside 208.75. And then looking at the monthly OPEX, which is January 15th, you can see that the EM is about $11 or so in other directions. So we're looking at an upside move of about 224 or so. Downside would be around 202. Obviously, if it hit 202 area, that would be the support area for the past few months, and that'd be a great buying opportunity for anyone that isn't long yet. If you're long, just be patient and just wait for the pop back up, right? It's Microsoft. It's not going anywhere at all, right? You want to be, cautious with the new names like Snowflake, Airbnb, Dash, even the Chinese EVs like Neo, Xpev, and Li. And you want to be looking at names that are strong already, right? Microsoft, Apple, right? Oracle, for example, right? Amazon, right? These are huge names, obviously, but they're huge for a reason because they don't have much risk around them, right? So after that, we have LAZR, which we discussed last week. They had a nice pullback on Friday, actually, along with QuantumScape and a few more names. So here's a 1 week chart, or here's a 2 week chart on Lazr, right? It rallied from about 15 when they SPAC'd up to 46 or so on Monday, and then they fell down to 28. So they already had a nice pullback off that high of about 41%. And the premiums are very rich here. So if you do believe in the company longer term, you can buy the equity and sell covered calls out of the money and pull in a lot of premium, right? Like, for example, let's say, well, first of all here, let's do the EMs for the week, right? So for the coming Friday, the expected moves, they don't have dollar increments, so it's harder to price out, but it would be roughly $5 in either direction. So you're looking at upside of about 33 by Friday, downside of 23. Again, given the rich premiums, I would say that if it gets to the downside, selling cash secured puts is not a bad idea, assuming that you want to own the stock. Again, do your research on this company because it's a newer corporation. It's called Luminar Technologies. They do LiDAR. We discussed it last week. But I think longer term, like I'm talking like 5 years out, it's a great play, right? Short term, it can be volatile as hell, right? That being said, there's a lot of premium to be had. Like, for example, you can sell cash secured puts at the 20 strike for January OPEX, and you're getting about $1.30, right? If we were to pull back to 23 or so by Friday or before Friday, you're probably going to get around like $3 or maybe even $4 for this OPEX, right? Which means that your effective entry price would be 20 less, 3 or 4. It means you're okay buying it at 16 or 17 bucks a share, right? Otherwise, looking at the next name, we're looking at Palantir, right? So Palantir, PLTR. I know a lot of people are trading that. I'm excited about it. I think they're going to do well going forward. The expected move on Palantir for the week ahead is 295 in another direction. So the upside would be 30.07 and the downside would be 24.17. And It's actually a great stock to scalp on intraday, right? It has a lot of volatility baked into it. Here is the chart. So you can see that each day it has nice, $1.50 moves or so in either direction, like pretty substantial moves. So top to bottom of about 8% here. You have a bottom to top of about 11% here. You have a bottom to top of about 12% over here. This is on Tuesday, you had a move of 13% top to bottom roughly. Monday, you had a top to bottom move of like 18%. So you have a lot of volatility in the stock, right? So it's a great stock for trading, but also for owning longer term too, right? And selling covered calls on equity that you own is a great way to lower your average cost. If you're not already in it, selling cash secured puts, also a great way to own the stock at a lower price as well. And so we can look at the option chain as well, right? Again, the 18th is Friday, and there is not a lot of premium for the far out of the money contracts, like 20 or below, for example. But if you go to January OPEX, you can see that the 20 strike, for example, gives you about 83 cents. That means if you were to sell one cash secured put over here, you're saying, I don't mind owning Palantir below 20 bucks. You actually own it at 20 minus 80 cents or so. You own it at 19.20 per share. And if it's stayed above 20 bucks, then you're making 80 cents in your pocket, right? So overall, 80 cents divided by risk of 19.20 is a return of 4.16% in 30 days. That's not too bad at all, right? Given what current saving rates are, right? Or savings accounts are paying, which is nothing pretty much, right? So not a bad idea right there. And then also to the upside, if you're playing upside moves at all, not a bad idea is to use options as leverage, but buying in the money contracts, right? So for example, you could buy the 20 strike contract for the January OPEX. You're buying in the money and you're paying basically 80 cents of extrinsic value, right? Because your break even is 20 plus, let's say $8, right? So 28. Current price is 27.18. You're paying 80 additional cents roughly, and that's for time value and for volatility premium as well, right? But given that, you could use a spread, for example, if you wanted to. You could buy the 20 strike perhaps and sell the 35 strike. And then essentially what you're saying is I don't mind owning the stock at 20, your long strike, plus your debit amount of about $6 over here. You're owning at 26, right? Whereas it's currently trading at 27. So just some ideas on how to play Palantir if you want to play Palantir. And again, looking at that OPEX for January 15th, we can see that the expected move for that expiration date is about $8 in either direction. So looking at upside of 35, downside of 19. So if you sold the cash secured put over here, really your risk would be that you're owning the stock at 19, which is where it might trade come January 15th, right? I wouldn't mind owning it there at all whatsoever. But yeah, obviously you have to go by your own thesis, right? Moving on to the next names, Crisp and Editas. I mentioned them last week. So Crsp, right? They're both in CRISPR biotech. And looking at the charts, we can see my chart. I just lost it. Here it is. Close that. So CRISPR. So we can see that they've had a massive run the last little while, right? They ran from about 110 or so up to 160, and then another kind of consolidating in this range right here. I do expect at some point to pull back to 110 area, which would be a great long entry. And following them is Editas. I mentioned them last Sunday as well, and they had a crazy week this week. So they actually ran this week. They moved from so I mentioned them on Sunday when it was over here at around $34 and change. They actually ran from 34 up to a high of almost 70 in the span of 4 days, right? So they actually had a run. One sec. It was almost 100% run over the course of 4 days, and then they pulled back on Friday down to a low of 57.50, closed back at around 61 area. So a pretty damn solid week on Editas, and I think that these names will have a lot of upside in the longer term. But obviously, don't rush into them on FOMO and think that you're going to miss the boat. There will be pullbacks, and those will be the opportunities to buy it. Right. We have a few more names, and then we'll do some Q&A, guys. Okay. So Next names up we have are Alibaba, which was requested, right? So Baba over here. Again, I'm not trading Baba right now just because of the uncertainty around China delistings right now. So you can see that it's been kind of in this little range for the past couple of weeks between like about 270-ish and 260-ish for the past roughly 2 weeks, right? And I expected to kind of sit in this area for the next month or so, given that there's a lot of uncertainty around these names, given that they may be delisted possibly longer term, right? So looking at the charts overall though, the heavy support, and I've looked at this chart a lot already, is right around 240 area. So that's your heavy support area right now. Again, if you want to own the stock and you want to risk it, you know, if it might be delisted, again, not a terrible idea is selling cash secured puts because you can fetch a lot of premium out of the money. And the probability of it going below that price is pretty low. In this case, it's about 16% probability of it going below 240 roughly, right? So if you don't mind owning the stock at like, you know, $37 and, you know, and 10 cents or so, you can sell a cash secured put there. Otherwise, I'm just going to kind of sit out and not trade it at all. The IV is low right now as well. So trying to do credit spreads on it isn't really the most efficient strategy right now either. And then last but not least, we have Pinterest also requested. I don't follow the stock at all. I just, you know, someone asked me to look at the chart, so happy to oblige. One sec, where is the chart? There it is, okay, it's Pinterest. So it's had a massive run since basically July, ran from about 25-ish up to 71 or so. I would probably wait for a pullback to, I would say probably around the 50 area if you're wanting to go long. Again, I haven't looked at the company at all whatsoever, but looking at their financials, let me just see. So currently worth $45 billion as a company. They're pulling in 1.4 billion in sales in revenues, and they're losing about $400 million right now. So I don't see the appeal. I know that they are generating more revenue and are seeing higher numbers of users. And looking at their past 3 years of revenues, they've seen an increase. In 2018, they had revenues for the whole year of about 755 million. Last year, they had revenues of 1.142 billion. And this year, they're on pace for doing 1.386 billion. So they are growing the revs pretty well. But that being said, they're still pretty rich for my blood. And here we will move on to the Q&A period. Any questions, guys? Anything that you want to look at? Anything that you're trading at all right now that you want to discuss? By all means.
Yeah, I think it's on the TSX, so it's nothing that we can do, but you guys can do options with. But the reason why I think as well, things like Pinterest will do well is with groups like Facebook and Google putting up walled gardens. So like next year in spring, they're going to be ending all cookies. So any kind of company that wants to third-party target you, they're going to have to pay them more to do so. Pinterest is actually going to be doing really well off of that because they have a lot of data based off of like people's buying habits and interests because they do like a lot of hashtags that kind of related to content. So I see kind of them really kind of pivoting their business model, just like how Facebook did in terms of selling our data to kind of make revenues. Pinterest is kind of doing the same thing, but the benefit for them is that they get more of the interests that are related to buying habits and kind of the kind of last click, kind of as they call it, for purchases. So they're going to be doing and attaining, I think, a lot of revenue off of that. And Acuity Ads is a Canadian company on the TSXV. This year alone, they've actually been going gangbusters. And they have a lot of technology that helps link that for buyers. So companies are trying to sell product, whether it be like Canadian Tire or Walmart, they then use Acuity Ads to kind of best direct spending dollars into these walled gardens. So it's not options, but it's a under $10 stock. So if anybody's interested in that kind of like ad technology stuff, it's really interesting. There's really good movement in there, and that's one that I'm following. It's ticker's AT.
AT?
Yeah.
Let me see if I can pull it up on my Interactive Brokers. I don't think I can though. Let me see one sec. AT. Oh yeah, I found it. Cutie Ads. I'll pull up the chart right now actually so you guys can see it. Here's a chart here. AT, again, it's traded on the TSE, so that's in Canadian dollars, I believe. And it's at $9 right now. It was at like $1 or so back in July. So it's had a pretty serious run. And ad tech is pretty powerful. And to add to what Tyler just said, Apple actually in their latest software update is actually going to be making it so that you can opt out of, or sorry, you actually need to opt in to certain features for for Facebook, WhatsApp, for targeting on Google as well. It might make it very hard for Google and Facebook to target ads to you, and it might make their services kind of not useless, but useless to advertisers, right? Because they can't derive analytics without pretty much following you, and you can only follow someone if they agree to it. Right now, there's no agreement required. You just download the app, and then that's kind of like saying I'm fine with whatever they want to do. But I believe Apple wants to change it so that you have to actually actively opt in order for them to track you, right? And I know for myself personally, I don't want to be tracked, like not that I have anything to hide at all. It's just a matter of I value my privacy, right? So why give them free information, right? So that might actually hit Facebook and Google longer term. And actually to add to that as well, Facebook, there was a discussion last week on Facebook antitrust and the possibility of breaking up Facebook and forcing them to sell off WhatsApp and Instagram. And the stock price actually it got hit a little bit, but it didn't really sell off at all. It's actually still in a nice uptrend. You can see over here, this nice little uptrend over here, right? It's still in the uptrend right formation, and kind of a little bit of a wedge actually, kind of like Microsoft. But if that were to happen, that could be a terrible thing for Facebook, right? They could sell off down to like 130 again, back to the March lows, right? So just keep that in mind too. You just want to look at FedEx, UPS, Pfizer, Corsair, AMD, and Nike too. All right, we'll run through them fast, guys. Okay, so Nike, let me just see what we see on the chart. Again, nice uptrend over here. I don't see a reason to get out of the stock if you own it right now. If you're buying it right now, you're probably buying a too high a price. Maybe get in through cash secured puts. And again, pull up your option chain, look at a strike price you don't mind owning the stock at. Wait for the IV to spike, because right now I believe the IV is not very high on Nike. Actually, it is. You know what? It is pretty high on Nike. So if you want to own the stock at, let's say, for example, 120, you can sell a cash secured put at the 120 strike for January 15th. You're pulling in like $1.25 or so. Your probability of being assigned is about 12%. So not very high. But I wouldn't be buying a stock at all-time highs right now. You want to be buying stocks that are on discount. I like Microsoft here. I like Apple here as well, because they're showing good strength going forward, and they have catalysts as well, right? Like Apple especially. What else was there? There was UPS. UPS had a nice pullback on Thursday. I was actually trading the call options on it. Got pushed out of my position at a loss, but they've also consolidated pretty heavily in the 155 to 175 area, and they may burst to the upside as well. However, someone mentioned last week that they heard from a Target executive that there's a lot of problem with inventory right now because of COVID. There are shortages of inventories, and that means that there are less items being shipped. So, even though it seems like there's a lot of shipping going on right now, that is a very interesting thought, that perhaps there's less movement going on than we think, because there aren't actually things available to buy, right? I know, for example, if you want to buy gym equipment right now, you can't buy it because a lot of it's made in China, and you just can't buy weights. You can't buy rowers. You can't buy treadmills if you want to buy that kind of stuff. And it's not there at all whatsoever, right? I know Sonos also has a shortage of their products due to a fire at their chip factory. And they're pushing up their deliveries until, I think, February, I believe. Also, Apple, with their AirPods Max, they're pushing their deliveries into March now, aside from the first batch. Also, they're having some issues with iPhone deliveries too, I think due to supply issues, right? So there are still a lot of supply issues globally in different areas, right? So either way, UPS is probably going to do very, very well going forward. So I do think there's a nice bull case there as well. On pullbacks, it's not a bad idea to play some call options a month out or so and just ride the wave in the short term. Like, for example, on Thursday, it pulled down to a low of 163 or so, and Friday I went up to 168 again, right? So I actually got in around like over here, and I cut my losses over here, and then obviously Friday it rose up. I would have made a nice, 400% or so gain, but I took a small loss of about 20%, right? So again, it's all about risk management in option trading. You're not going to win every trade, right? So just keep that in mind too. What else are we going over to? Let me see. We'll go over Fedex, and we'll go over Corsair and AMD, okay? And that'll probably be it. So FedEx, similar setup as well. And what I just said to UPS applies to FedEx as well. So in the chart, super bullish. Again, very, very bullish. It might see 350 perhaps in the next few months. But again, if you are in the stock already, covered calls out of the money is not a bad idea. If you're not in the stock already, cash secured puts is not a bad idea to get a nice entry into the stock. AMD, I believe, will make new all-time highs. It actually did I think it was 2 weeks ago. It hit that 96.37 area, which I called out a few weeks ago, and it's since pulled back, but now it's consolidating in this range over here. And so what happened when it broke up from the previous range? You saw it sit in the range of like around 55 or so on the upside, and the downside was around 40, around 50 or so, right? It was in this tight little range for a few months, and then it broke up, created a new channel, right, between 75 and 85, pretty much, right? And now I believe it's breaking up to a new upside, and it'll form a new base around the previous all-time high. So you're going to see a support area of around 90, and you'll see a new high area of around 105 or 110 or so. You'll see it bounce in that range for a few months again, right? That's my thought. Those are my thoughts on AMD. And what was the last one? Oh yeah, Corsair. That's the last one I'll go over, and then we'll just cut short Corsair, right? So Corsair, nice pullback again down to the 3350 area. Not a lot of support here, really, right? If it breaks down below, it could easily go down to around 2250. But they're performing very well right now as a company, and they do have a lot of premiums in their covered calls. So if you are in the stock, selling covered calls is not a bad idea. And I prefer to go out, 1 month at a time at the approximately the 0.2 delta contracts and collect that premium and just kind of sit and wait for to either be assigned or I pull in the premium, right? So for example, if you own Corsair stock, you can buy it for around $33.50 right now per share. You can sell the 40 strike calls right now for January 15th for about $2.65 roughly, or $2.62 roughly, right? Which means that your effective price is $33.50 minus $2.62, and so you're in at $33.50 minus 2.62. You're in at $30.88. You have upside of $9.12 for the month. So your upside is 9.12 divided by 30.88 is about 30% in 1 month, which is a phenomenal return. And if you're not assigned, you're just pulling in premiums of about 8.5% or so over the course of a month. Yeah. What else, guys? Anything else before we go? Any questions? Any ideas you want to share at all? Oh, Milton asked, how do I math out the upside or downside? You want to price out the straddle, right? So a straddle is the at the money call and at the money put. So for example, let's say you want to look at AMD, right? They close at 91 or so on Friday. So for January 15th, let's go for Friday's OPEX, right? So 91 is the nearest strike to the current price, right? You're looking at roughly $4 combined for the put and the call. So upside, the option market is pricing an upside move or downside move of about $4. So upside 95.30 or so, downside 87.30 or so, right? That's how you price out the expected moves. Kenan asked, do I have videos on new stuff? I don't right now, but I will be putting out some new content on basic strategies over time. I'm just focusing more on price action videos right now, but I will be putting out some videos like that. So if you do subscribe to my channel, on YouTube. I posted it in chat. It's also Optionfinity, all one word, OPTIONFINITY. That's my YouTube channel. And I do post there pretty often, 3-4 times a week. This video will be posted there as well. And yeah, Pfizer, please. Sure. Yeah, I'll go over Pfizer, and that'll be the last ticker. Okay, guys. So Pfizer. You can see the chart. PFE. So nice big burst up to the upside. Hit a high of the year at 43 this past week. Not a lot of support really though until about 39. So I'd probably be a buyer around here if you do want to long the stock. Again, I don't think the vaccine is a great catalyst for the stock because it's not a high margin item, right? It isn't like they can sell a vaccine for, for thousands of dollars, right? Each one will be a low ticket item per vaccine issue, right? So I'm not really too bullish on the stock based on that thesis overall, right? You want to look at their overall pipeline, not just a COVID vaccine, right? Yeah, that's pretty much it though. Yeah, no problem, guys. If you have any questions at all, I'll be posting this video on YouTube if you guys want to watch it again. If you have any comments, just pop them over there, and I would appreciate if you guys do share the video and obviously like it. It helps out a lot. If you have any questions on Discord, hit me up. I'm more than happy to do that as well. And have a great week, guys. Trade well, manage your risk well, and yeah, we'll see you guys soon. Take it easy.
See you, Nick.
Okay, thanks, Nick.
No problem, guys. Later.
Thanks, Nick.
My pleasure, guys. Take care.